Well, a new report from luxury real estate company Sotheby's finds overall economic challenges are being felt differently in some of Canada's largest cities. Local influences are now a key driver in the high-end real estate market. For more, let's bring in Don Kottick, CEO of Sotheby's International Realty Canada. Thanks so much for making time for us today, Don.
Thanks for having me, Jacqueline. Nice to be here.
So tell us about what you're seeing here when it comes to this local influence. Just how different is it?
Well, I mean, probably if we looked at the market, half a year ago, we had all the markets kind of following a similar trend. What we're seeing now is all the major markets are behaving a little bit differently. We have, Vancouver, which has moved to much more of a balanced market. We're seeing a lot of activity in the 10 million plus range, a lot of activity in the 3 to 4 million range for detached. You go to Calgary and you start to see a very, very healthy market. We're starting to see inventory levels are different across the country. You come to Montreal, you start to see Montreal is the market that probably is probably languishing a little bit behind the other markets. And then you come to Toronto, we have, tight inventory levels. And the one thing that we're seeing is we're seeing for the first time in a long time coming into a true summer, cyclical summer slowdown, which we haven't seen in quite some time.
That isn't typical in the luxury market to see people pulling back in the summer because, I mean, it tends to be the time of year that, people take a bit of a break.
Well, it used to be typical before the pandemic. And then from the pandemic, we've had all the cycles kind of thrown out to the wind. And it just now seems at this point, we're starting to come back to a more traditional cyclical market. And I think one of the instigators for that was the July 12th Bank of Canada rate increase. And I think that has really brought us back into a traditional cyclical market. And, that we'll find out in the fall if this kind of prognosis is true.
Yeah, how much has, the Bank of Canada's latest moves influenced the psychology, do you think, of people? Because, it seemed like the pause back at the beginning of the year did spark more enthusiasm in the housing market or, more confidence, perhaps. And then these latest hikes. What are you seeing?
Well, I mean, you have to look at probably if you look at the impact is far greater in the conventional part of the market. When you get to the luxury, the ultra luxury space, the impact of interest rates probably are less pronounced. And one of the things that we are seeing right now is if we had have talked, like I said, 6 months ago, there was a big gap between seller expectations for what their properties are worth and what buyers are willing to pay. And I would say, this is fairly consistent right across the country for the first time in a long time. Sellers are realistic in terms of what they're going to list. Buyers, have a fairly, strong understanding of what the values are. And that gap has narrowed somewhat. And we haven't seen that in quite some time.
When you're looking at the luxury market, I mean, you talked about the hot pandemic activity. What were you seeing bidding wars for luxury properties, or is the market just more limited for those sorts of sales? So the buying pool would be more limited as well.
Yeah, I mean, it's a smaller segment of the market that we're talking about, but back in the pandemic, people were probably buying properties that really didn't fit all their, chosen attributes. But now I think, they can take their time, they can be much more discerning, and they can find the properties that have all the characteristics and attributes that they're looking for. In the past, they would have to buy something, they have to renovate. Now people are tending to wait and find that property that they really want to buy, specifically in the luxury, ultra luxury space.
Are you seeing any, stressed sales at this point, Don? Because when I'm thinking, maybe not necessarily some, luxury home buyers would have large mortgages. Maybe they're lucky and they don't. But if they did, and you're seeing rates go up on those, my goodness, the payment could really change when you're talking about a big mortgage. Are you seeing any of that sort of stress come through?
Well, first of all, one thing you have to understand about the Canadian real estate market is there was a study that just came out recently, and 50% of the homes owned by Canadians don't have mortgages. So you're only talking about 50% of the market that, have mortgages. Therefore, the opportunity for, a stressful situation is reduced. From my, management team across the country, we have not come across very many, if any, distressed sales at this point in time, because I think a lot of people, when they qualified for their homes, were basically qualifying for a rate greater than the actual mortgage that they were paying, and I think that has probably afforded them some level of comfort, and therefore we're not seeing the number of distressed sales at this point in time to be very many and very few.